What's up, guys? I'm Mike from StockedUp. In this episode, I'm going to be showing you guys how futures work and how to use them. So I'm sure you guys heard a ton of times that, like, let's say it's a Sunday like it is today. It's Sunday, September 6th, 2020. Now, let's say it's a Sunday and it's a Sunday night and you hear people start talking about the market's already down or the market's already up. And you're probably thinking to yourself, well, how can the market be moving at all if it's not even open, right? The market opens at 9:30 a.m. Eastern time, right? And you're going to hear people saying, oh, the market's down 200, 300 points, but it's not even open, right? So what they're referring to is what's called futures. So futures are kind of the middle ground between stocks and options. And I say this because like with futures, it's not like you have to pick like a specific like strike price or anything like that. But at the same time, with futures, it is highly leveraged and there are expiration dates with it. So I'm going to explain in this video how futures work, what they are, and just give you like a general explanation and, you know, just some tips and tricks I have for you guys. So futures can be traded. Like I said, they do have expiration dates, and they're kind of the middle ground between stocks and options. I say that because there's not like any strike prices, but pretty much, let's say we look at gold futures. So right now, I am on Thinkorswim. It's a platform by TD Ameritrade, but I'm looking at gold futures right now. The first thing you're going to notice on Thinkorswim is that you can see there's a slash in front of the ticker symbol. So with the stock, you just type in the stock ticker. With an option, you put like a period before actually looking at the option, kind of like this Apple 115 strike put option. With futures, you do a slash and then the ticker symbol. So slash GC. These are gold futures. So we could see on this chart, it shows the futures values of gold for the last 6 months. So this is how it works. But pretty much what futures are is they are kind of like here. Like, for example, like let's say I buy gold futures right now, right? And this futures contract expires in December 2020. I can see that because it says December 2020 right there, right? So we can see that with gold, like if I bought the futures right now, that means if I buy them at $1,940, that means that I'm agreeing with someone that I am going to buy, you know, an ounce of gold for $1,940 by December 2020. Here's the thing. If gold is trading lower than $1,940, I got kind of screwed. However, let's say gold is at, you know, $2,200 by December. I just got an amazing deal because I could buy, you know, however many ounces of gold by that predetermined date. So, for example, you know, with gold specifically, 1 ounce equals $1,940. So you can buy however many contracts you want. But pretty much, if you wanted to, you know, you can short contracts too. So like, you can short the futures, and as long as the value is lower than where you shorted at, you'd be in a good position. But it kind of works the same for any commodity, whether you're dealing with gold, silver, whether you're dealing with corn, like slash ZC. Like I think this is like a bushel of corn. So if you buy it at 357, what happens is you can actually like by the expiration date, you can sell out of the future just for your cash profit or loss, or you can actually have corn physically delivered to you. And it works with any commodity, whether it's gold, silver, palladium, whether it's like I know there's like hog futures and soybean futures. So there's so many different commodities, but futures can be cash settled or physically settled. It's like you can literally get, you know, an ounce of gold. So like for example, if you buy a future right now for $1,940 and by the expiration, you can actually just buy that ounce of gold. So it's kind of cool how it works. And pretty much there are also index futures. So like for example, when people are referencing the Dow, it's slash YM. When they are referencing the S&P 500, it's slash ES. When they are referencing the NASDAQ, it's slash NQ. So that's how people tell when the market is up or down before it even opens, because futures trade like 6 days, no, they trade, yeah, like 6 days a week. They have a weird schedule, but they actually open up late Sunday evening. So they open up kind of, yeah, like later in the day on Sunday. So they have like a weird schedule, but it's pretty much, if you look at futures on Sunday, they will be moving long before the market even opens. So it's kind of cool. That's how you reference them. You can also go on CNBC.com, and they actually have, so like, let me go to CNBC.com. All right, you can see that when you go to the top right here, you have U.S., EU, Asia, bonds, oil, gold, right? Bonds, they are looking at the bond futures. They are looking at oil right here. You can look at crude oil. So if you go to /CL, you can see like this is like a barrel of crude oil. So you can buy a barrel of crude oil for $39.51. If you hold this out till October, the expiration date, you can actually get a barrel of oil. But pretty much when you buy a contract, you're pretty much making an agreement with the person who sold it to you that you are going to buy 1 barrel of oil for $39.51 by October 2020. If it's below that point, you got kind of screwed. If it's above that point, you're making some good money. So that's how it works. If you go to gold, gold, silver, copper, platinum, palladium, there's even Forex futures, and even Bitcoin now, /BTC. It's actually pretty cool. They have Bitcoin futures. This is pretty new. And then pre-market is where you're going to want to look for Sunday night. It'll tell you whether the market's up, down, or unchanged. Right now, futures did not open yet, so that is why we are not seeing any data. But futures overall are pretty cool. They let you see what the market's doing before it even opens. So I hope this video helped you guys. There's so much more information to go into with futures, but futures are pretty complex financial instruments. Like I said, they're kind of the middle ground between stocks and options because they are leveraged, but they don't necessarily have like strike prices or anything like that. And they do have expiration dates. So overall, I hope this video helped you. The main takeaways is that futures allow you to see what the market is going to do before it actually opens. To do that, you can either log into Thinkorswim or your brokerage, or you can just go to CNBC.com and see what the futures have it right there under pre-market. For the Dow /YM, S&P 500, ES, and the NASDAQ is /NQ. So I really hope this video helped you guys. If you guys have any questions, let me know in the comments down below. But other than that, thanks for watching.